Welcome to Accounting 12, Unit 14, where we study merchandising accounts. When we finish this unit, students will demonstrate the skills necessary to be able to describe three types of business operations. Students will be able to prepare a schedule of cost of goods sold. Students will be able to record merchandise purchased for resale under the periodic inventory system. Students will be able to record transactions for merchandising accounts under the periodic inventory method using the following accounts: sales returns and allowances, sales discounts, purchases, purchase returns and allowances, purchase discounts, transportation in, and delivery expense. Students will be able to record transaction for merchandise inventory under the perpetual inventory method using the following accounts: merchandise inventory and cost of goods sold. Students will be able to define contra revenue and contra cost accounts. Let's take a look at three different types of businesses. First of all, we have Surrey Lawn Maintenance Company, London Drugs, could be in any mall, but I put Guildford Mall here, and Norco Bicycles, who build bicycles. What do each of these businesses do to earn a profit? Surrey Lawn Maintenance Company provides a service where they look after the lawn and garden needs for homes and businesses. London Drugs buys merchandise and then resells it to the public. Norco Bicycles buys raw materials and turns them into bicycles. Which of these is a service business? Well, Surrey Lawn Maintenance Company provides a service where they look after the lawn and gardening needs for individuals and businesses. Which of these is a merchandising business? London Drugs buys materials, buys products, buys merchandise, and sells them to the public. Which of these is a manufacturing business? Well, as I said earlier, Norco Bicycles buys raw material and turns it into bicycles. A service business sells service. A manufacturing business converts raw materials into saleable products. And a merchandising business sells products that they have purchased previously. The merchandising business is what we want to spend time on during this unit. A merchandising company buys finished products from manufacturers. The names of these products are called merchandise. The total dollar value of goods on hand for resale is found in an account called the merchandising inventory account. The cost of goods sold is the cost to the merchandising company to produce the products that they will sell. In order to sell products, they must be purchased from a manufacturer. There's a different way to calculate net income for a merchandising business. We learned previously for a service business that we would take revenue and subtract the expenses, and that would give us our net income. However, for a merchandising business, we have to include the cost of goods sold before we can consider the expenses. There are two equations that you need to understand in order to get to the final net income. First of all, you take the revenue and you subtract the cost of goods sold. This gives you the gross profit. Once you have the gross profit, you subtract the expenses, and this gives you the net income. In order to understand what the cost of goods sold are, we need to make a calculation on a schedule called Schedule of Cost of Goods Sold. In order to do this, we have to take an inventory at the beginning of the accounting period, where we count up all the merchandise and give it a value. In this example, at the start of May, the merchandise inventory was worth $16,000. During the accounting period, purchases are made, and these are added to the inventory. So we add the $16,000 to the $36,000 that we just purchased, and this gives us the total cost of the merchandise. During the accounting period, merchandise is sold. So we have to calculate that, and the way we do that is by taking an inventory at the end of the month. In this example, it's $18,000. This gives us the costs of goods sold. $52,000 subtract $18,000 gives us $34,000. Once we have the cost of goods sold, we can prepare the income statement. First of all, we indicate the revenue. In this example, we have revenue of $56,000. Then we include the cost of goods sold. The cost of goods sold, based on the schedule that we prepared, is $34,000. That gives us our gross profit of $22,000. Next, we consider our expenses. We total up all the expenses. In this example, it's $12,600. And we subtract that from the gross profit, and that gives us our net income of $9,400. Your assignment today is to complete questions 1 and 2 online and complete exercises 1 to 3 in your workbooks.